Welcome to MarketTamer.com. You're looking at a chart of the S&P 500 on Thursday, June 25th. And a couple of days ago, I sent an email to members, and in it, I mentioned that it was not a time to be aggressively bearish, time to actually be a little bit cautious if you had those bearish positions in play or were considering more aggressive bearish positions. And if you were looking to know what does an aggressive bearish stance mean, well, something in the line of a long put option with no short put hedging it, so not a bear put but most likely just a long put, or just having a short stock position without covering it. Something like a naked call would also be considered aggressively bearish. All of those positions do not take advantage of a market that is rising rapidly. Obviously, in fact, they do very poorly in those situations. And the reason I mentioned it, certainly one of the reasons, was because of this Bollinger Band here. There was a big move down a few days ago. We touched a Bollinger Band, and I mentioned that if historical norms were to be expected, probability would lean towards a bounce. Now, it's not to say a correction could not have occurred. Obviously, when there is a fundamental news event, such as there was with the Federal Reserve, there's always a possibility that the market breaks through the Bollinger Bands, continues to the downside even more than it already had. And yet, what I mentioned at the time was that there was a pretty good chance we would bounce up due to technical reasons, hitting this Bollinger Band, and also the Federal Reserve in discussions over the past few days. And obviously today what's happened is the excuse for rising, part of it certainly on Bloomberg, is that Ben Bernanke's position is more safe than was potentially expected about 24, 48 hours ago. So irrespective of the reason, once we hit extremes, technically, it's always a good time to be cautious. Obviously, if you're in positions that are very bullish, then there's always good reason to have hedging in place if you hadn't had any before, but that's certainly not the way we typically like to trade. We always like to trade with hedged positions, so that if we end up in a place where an extreme has occurred, such as when we come right down to the end of a Bollinger Band, we're not panicking into the purchase of put options unnecessarily. Now, sometimes, as I mentioned, there will be news events that will dictate that such hedging is warranted. Sometimes it's prudent just from an overall risk perspective on the portfolio, or indeed if you have excessively large position sizing in place, but that all stems back to risk tolerance, risk management. And certainly if you have any questions on that, feel free to come into any of the classes on Module 7 reviews at MarketTamer.com. But moving on, let's look to the NASDAQ. What we see is the NASDAQ has actually shown greater strength than the S&P 500 in terms of technical strength. We're seeing that 5-day start to peak up higher and more aggressively so than in the other indexes. That's what we've seen throughout this trend up. In fact, it was only during the period of technical weakness, and we highlighted at the time that when we were rolling over here, we noticed it was the first time the NASDAQ was not relatively outperforming the S&P 500 and the Dow. So here we go, we see a pretty good move up in the NASDAQ, and technically it's looking stronger as well. Moving on, we'll look at the transports. They had a fantastic day here. In fact, we can see a 4.38% move in the transports, and maybe no surprise to see that Union Pacific has also had a fantastic day, up 5.31%. And this certainly is a surprising move given the trend. If we were looking at the trend, we'd see certainly bearish, bearish, bearish all the way down. The move up yesterday was not significantly bullish. In fact, it was trapped right at the 5-day. So today's move would have caught a lot of investors, and as a result, what we'd expect is potentially some follow-up to that move as people try and reposition. And finally, we'll just note USO, United States Oil Fund, that's also having a decent day, up 2.5% and showing signs of bullishness again. If you have any questions on anything we've covered, please don't hesitate to ask. We'll look forward to seeing you in classes. All the best. Bye-bye.